So welcome to Investing in Crypto. I'm joined today by three experts, three friends of mine basically. Firstly, I'd like to introduce you to Jonny Fry, who is co-founder and CEO of Teamblockchain Limited. He's a blockchain, digital assets and funds specialist. Wave at us all, Jonny.
Good afternoon.
Thank you. Also, my friend Gary Nuttall, who's an emerging technology consultant with a passion for blockchain, cryptocurrencies, and tokens. He's a consultant to several crypto custody startups and runs numerous crypto-themed social media channels and groups, and I'm sure he'll tell you about them. Wave at everyone, Gary.
Hey there.
Yeah. And finally, my friend Eiren Newton, who's a mobile and blockchain software engineer, and he helps people get into crypto. Give us a wave, Eiren. Where are you? Hey, yes, say hello. You're muted.
Hello, sorry. Muted there. How you doing?
See you. Well, that's nice. So these are our guys, and we're going to have all sorts of questions. So make sure you've got your questions ready. By the way, hope you're enjoying the drilling that's happening behind me. That's one of the joys, another joy of Zoom. Every now and then when I'm not speaking, I think I'll mute myself. It's just tremendous having all of that drilling. So this is the first webinar we've held that is just questions and answers about crypto. So it'll be interesting to see what happens. As you know, I run a webinar on how to start investing in Bitcoin and other cryptocurrencies, and I've got one coming up in a few months' time. So have a look at the webinars page on Money Magpie and sign up for that. It's only $11.99, so it's cheap at half the price. But today you can ask for free any sort of questions you like about investing in crypto, the crypto landscape, decentralized finance, or DeFi as the cool kids call it. No questions too dumb. This is a safe space. So feel free to just put up your hand and ask a question. It could be directed at me or any of my three experts here, whatever you like, no problem at all. And I thought, just to start, I will ask a few questions. So I've already been asked one or two things, and I thought, well, I'll bring them out now to see who we can get a good answer from. And my first question is, and I'm going to ask Gary first. What on earth is happening to the crypto markets? They all seem to be tumbling. Is this a short-term thing or a long-term thing? What do you think, Gary?
It's normal for crypto. This is nothing new. I get it quite a lot where people are talking about the collapse of crypto right now. And I say to everyone, oh, do you mean all the blockchains are failing and all the exchanges are failing? Oh, no. The prices have gone down by 10% in a week. It's like, yeah, that's the normal world of crypto. And that's something for people who are new to this space. They need to understand that this is a highly volatile, highly speculative arena. And if you're used to investing in things like shares or gold, which are relatively stable, then crypto is a bit of an exciting ride for you. So just be careful. So to answer the question, I keep saying we're not having a crypto crash at the moment. It's just a market correction. But it's a market correction that can mean a price change in a market of 10% in a day quite easily.
So when you say correction, how long do you think that correction is going to last? I mean, $50,000 question, I know, but do you think it's a short one or is it going to be months?
So I would say it's any time between now and could be a few months, could be a few weeks, few days. I really don't know. I always argue that I don't offer financial advice. I don't offer recommendations. I do help people who want to get into this space and want to learn about this space, and I educate, but I don't offer predictions in any way. Because if my predictions were right, I wouldn't be on a call right now. I'd be on a beach in Bali.
Quite, that's what I always say. Jonny, what do you think about this correction? Do you think this is the way it's going to stay for a long time, or is it just, as Gary says, just one of the downs that you get with the ups?
Well, look, the whole thing about the crypto space is driven by sentiment. So it's driven what people believe. In the short term, what we've seen is basically the Chinese authorities are cracking down on Bitcoin miners. Bitcoin is tremendously important in the crypto space because it still accounts for 46% of the entire capitalization of the market. So Bitcoin is a bit like the tide. When Bitcoin is going up, all the boats float, i.e. prices go up. And when Bitcoin falls, then or most of the actual other cryptos fall. So what we're seeing is a movement away from one particular country, like China, which dominated Bitcoin mining. And we're now seeing it moved into a variety of other countries that are searching for cheaper forms of electricity. So actually, I think what's happening is really, really good long term. But in the short term, if anyone can tell me, why, certain companies on the stock market are trading on 3, 4, 5, 6 Tesla 650 PE ratio, yet you've got something like Credit Suisse or Goldman Sachs on a PE ratio of 8. It's all down to sentiment. And what we have at the moment is that sentiment is against a number of the cryptos. How long it will last, it's pure guesswork. And as Gary says, certainly having been involved and run a fund management company for over 25 years, I'm not authorized to give financial advice. And I think that it's an asset class, though, you ought to have exposure to. But in terms of trying to pick, the right day, the right week to invest, it's, you've probably got more chance of having a dartboard and just throwing and guessing. But then that's true of equities. If you're out of the stock market for the 10 best days in, say for FTSE or the S&P 500, you'll typically cut your returns by nearly 50%. So timing is very, very difficult. So maybe dripping, we were talking just for everyone coming on, we're talking about the power of pound cost averaging and putting a little bit of money on a regular weekly, monthly basis into this asset class probably makes more sense than trying to pretend that when it's going to go up or what's going to actually happen to it.
So it's interesting that you say that you think that people should be exposed in some way to this asset class. In other words, that everyone should have a little bit of money, at least in crypto, because, you talk to other people, other sort of investment types, and there are a few, I'm sure you've talked to a number who go, oh, wouldn't touch it. Oh, no, wouldn't touch, don't touch crypto. But you think it is a good idea to have at least a bit of money in it.
Well, that sounds like someone's portfolio just flushed down the pan. Then it sounds. Yeah, look, this is it's a new asset class. So what do I mean by an asset class? Well, you have equities, you have bonds, you have commodities, you have typically currencies. They're the main ways that you can invest your monies. And what you've now got crypto assets, which they're not necessarily correlated or driven by economic impacts. And what's going to be very interesting as we see inflationary pressures feeding through the economy, because if you look at the measure of inflation according to US statistics, if we had the same measurement now that we had in 1980, inflation in America would be running at about 11%. If any of you got any builders friends or property developer friends, go and ask them how easy it is to go and buy a bag of cement. A sheet of plasterboard has gone from £5 to £13.60 in the last year. So we got potential inflation pressures with a literally a mountain of money as people, go to your local pub or restaurant. What's happened? It's a lot more expensive. Now, if that feeds through and we do see higher inflation continually coming through, and therefore that leads to higher interest rates, there's only 12 companies in the S&P 500 that are net cash positive. Companies are massively in debt. And if you have higher interest rates, then you will see quite a big correction on the stock market. The question is, though, will the cryptos fall as much, or will they bounce back faster? We don't know. So having between 1% and 5% of your money in alternative asset class, in the same way people would hold maybe a little bit of silver or gold, you've then got diversification. You haven't got all your eggs in one basket.
Right. So it is a really useful thing for diversification. Yeah. Just never put all, because that's one of the things I'm constantly saying, don't put all your eggs in one basket. Don't do it. Spread your bets. Always spread your.
Yeah. And one goes up and the other one's going down. That's fine.
And even better, the crypto market, don't just buy eggs.
Yes. Yeah. Don't just buy Bitcoin.
I'd like to add something to there. I think, talking about when you want to enter a market, I think to understand what the crypto market is about, because it's very different to the traditional stock market. And in my experience, what I've seen happening, even when the traditional stock market is in trouble, the cryptocurrency seems to flush, it goes up. And in some ways, you're seeing a lot of the heavy hitters in the kind of stock market looking at a safe haven and crypto, and you see a lot of money flooding into Bitcoin when the stock market is in trouble. They're kind of looking at it as a nice place. And I don't mind if you mind me sharing a quite famous screenshot of a chart here, and this has kind of really helped me from the start when I first got into crypto, and I'll share that now. And it's really just, I can't share my screen, Jasmine. But it's just really understanding really what Bitcoin is. And
I'm sharing it now.
Okay, and really there's different seasons of Bitcoin. I hear a lot of horror stories of people buying in at a peak of a bull market, and it then dumping down and then selling. And then that's the point of where people say, I lost money. I say, for the even the short term, long term, you're not going to lose money here unless you do something and get led by your emotions and you fall out of it. But let me just share this. So I don't know if the other crypto guys know about this famous sort of chart here. So this is looking at the cycles of what Bitcoin actually is and how it works, and how the halving, if people know what that actually is, and the algorithm that's built into Bitcoin to really understand what the markets are doing. So every 4 years in Bitcoin, as gold, there's an algorithm that basically halves the payout of the Bitcoin miners, which is the algorithm that sort of mimics gold for its finite sort of mining mechanism. And this chart explains the different seasons of the market going through from 2011 all the way up to today. I mean, it stops here, if you can see here, at 2019. And it was interesting to see, will this extra sort of, to 2020, 2021 play out? And yes, it did. It didn't go as high as maybe we're, here yet, but there's been a lot of manipulation and institutes getting involved and playing with the market. So we may still see that, and we're still seeing heavy manipulation. But I would say, for early investors to get into this, choose your entry point, speak to people, look at the market, look at charts like this, and choose something you're comfortable with. And in any way, any money that you're putting into Bitcoin, if it's going to go on a down, you're going to be locked into kind of a 4-year cycle, unless you happen to buy at the beginning of a bull and you're happy to sell out at the top of that market. But it's just really understanding the movement of what Bitcoin does, I would say, and when to enter, and be comfortable with the fact that you may need to leave your money in there for 4 years or even 8 years. As long as nothing really bad happens globally with Bitcoin, I think it could be a good place to be.
Right. Thank you.
But like any investment, just be willing to lose that money, I guess. So it's not financial advice, but this chart and it really helps a lot of new people I get into it, because it gives them a good visualization of what happens.
Great, thank you. If you could stop that share, that would be lovely. Oh, thank you. Thanks for that. And that in many ways is kind of saying what you were saying, Jonny. I mean, just sort of regular. I mean, the ideal for everything is, every type of investing is to buy low and sell high, but who can time the market?
Can you, you able to share? I'll just show you one screen to show you what we were talking about with this regular savings.
Okay. Oh, sorry. I'll just click on multiple. There we go. Yeah.
Okay. So hopefully you can see.
Yeah.
Can you see this?
Oh yes, that's an impressive one.
So all this is showing you is, $10, £10, €10 a week for 3 years. And what would it be worth if you'd actually put it into the Dow Jones, which is the US stock market, gold or Bitcoin? And you can see here, you've saved £1,500 or dollars, and the stock market has gone up 23%. Gold is up 16%, and Bitcoin is up 330%. Now, this isn't a recommendation to go and buy Bitcoin. What it's doing, you can see by just putting a little bit of money away, you're getting exposure to an asset class. So here, when the Bitcoin, when it was up around about 40,000, you were buying less per month than now when the price is obviously around about 30,000. And this is a very volatile asset class, and there's no guarantees. There's some people say it's going to be worth $1 million in 5 years. Some people say it's going to go to nothing. But by putting away just a little bit of money, you can smooth out the ups and downs. And then, as we were talking earlier on, the rest of your capital, your lump sum that maybe you've saved, it really ought to be invested in another type of asset class, in equities, in properties, in bonds, something which is hopefully going to be less volatile. So don't get suckered in and put all your money in, but maybe have a little bit of exposure. And some of those institutions that you mentioned earlier on that were very skeptical and very nervous about that, it's very often because they just don't understand it. They haven't looked at it. You kindly introduced Eiren, Gary, and myself as experts. Well, I'm the first to put my hand up. I am not an expert. I do 20 hours a week. I write a weekly analysis that goes to 120,000 people a week all over the world, and I'm not an expert. This market is changing and moving so quickly, and that's what makes it really exciting, because there's all sorts of different opportunities. But to be arrogant and say I'm dismissing it completely, not having no exposure, I think over the longer term you may well regret that.
Yeah, I think so. I agree, Jonny. I think that it's such an interesting area. It feels to me like it's the future. I mean, Gary, you talk a lot about this, this is, the future. And like Jonny, I know you've said you're interested in all sorts of different things, different aspects of it. Do you think this is definitely the future now?
It's certainly a future, yeah. And like Jonny says about expertise, I've only been involved in this space for a relatively short time. I've only been involved and interested in cryptocurrencies for about 6 years. But then when you speak to other people, you go, 6 years, I've only been into it for 6 months. So it's kind of relevant. So yeah, there's definitely a place for it. We need to be mindful as well that whilst the whole crypto market behaves very, very differently, it is absolutely tiny. I think at the moment, the market cap of entire crypto market, Bitcoin, Ethereum, and all that, something like $1.4 trillion, which makes it smaller than Apple. So you could just trade in Apple shares instead, and you'd be dealing in a bigger market cap than the entire crypto type thing. So definitely it has a future. It's just how big a future it is. And at the moment, there's a lot of discussions going on about which governments are going to be supportive, which governments are going to be anti. In the UK at the moment, there seems to be a bit of a pushback by the retail banks against crypto, which is making it harder and harder for you to get into the space in the first place, because when you try and link your exchange or your wallet to your bank account, you start getting errors and warnings come up and everything as that. So I think at the moment it's quite a challenge. If we can overcome that and we can get the banks to stop closing people's bank accounts because they're dealing in crypto, then there's a future, definitely. But for now, I think we're in troubled times. And I think recently there's been a lot of this restabilization of the market. We've seen Bitcoin drop down to about $33,500. I think it was earlier on this week. It's just gone back up again. It's broken out, which is great. That volatility means that people are going to lose money if they actively trade in it, whereas they may not long term. Regulators get worried about people losing money, because part of the role of a regulator is financial stability and to stop Granny from losing her savings. And right now, if Granny's buying into Bitcoin, there's risks you might do. So if we can overcome that, if we can get some support from regulators and that kind of thing, I think it has a future, definitely.
Yeah, I do think it's rather hypocritical of the banks. I mean, Gary, you and I have talked about, I think it's TSB that said, oh no, we're not going to deal with Binance and Kraken, two of the main exchanges, because there are a lot of fraudsters there. How many fraudsters are have got bank accounts? There are just, every single retail bank you can think of, they've got a load of fraudsters as some of their customers, whether they know it or not. And I think, they're
but Jasmine, it's not just their customers, it's the way they conduct themselves.
Yeah.
HSBC would just fined 325 million because they were putting themselves ahead of their customers on the foreign exchange market. We've seen tens of billions of fines levied against the banks for KYC and AML. And the trouble is that the banks you have to feel sorry for the banks. The banks really seem to be a little bit rudderless at the moment.
Yes, true.
You've got the likes of PayPal, which is valued at 2.5 times the size of Goldman Sachs, of Citibank.
Wow.
It's valued at almost the same price as JP Morgan, which is the biggest bank in the world outside of China, a payment platform. PayPal. Visa is definitely bigger than JP Morgan. So what you're seeing is the traditional markets that the banks were involved in. Lloyds Bank yesterday announced another 29 branches they're going to close. They're kind of trying to work it out. And because in the past they've had so many fines imposed on the regulators, they're nervous about getting involved and suffering a whole load of more fines by getting involved in this sector. But let's be honest, the so-called experts told you that you shouldn't have more than 5% of your money in American stock market in your pension. And that's been the advice from the pensions industry for the last 30 years. And that's just been dreadful advice because the US stock market has been a fantastic performer. So the so-called experts very often don't get it right when it comes to investing.
Well, it's a very good point. And bonds as well. I mean, bonds has always been, the safe haven for your pension money.
It won't be safe if interest rates go up.
No, it's not.
They'll annihilate your savings.
Yes. Now I've got a question.
Can I add something to that as well?
Yeah. Sure.
I mean, talking about the future of, Bitcoin or blockchain, is coming from a developer side of things, blockchain is not going anywhere, and no matter what the media say or anything like that, it is intrinsically built into the infrastructures now. I work very closely with Visa and MasterCard on development and various other sort of banking and financial platforms. Now, these blockchains are being built into the infrastructure. They are by no means going anywhere. If people want to destroy, Bitcoin because maybe it's not got so much of a function, but blockchain as a whole will always be around. It's built into everything now. And I think with the traditional banks, they either need to get on board or they're going to, they've already missed the train. There's a lot of companies out there, Visa and MasterCard, that offer, payment cards for you spending your cryptocurrency in shops and things like that. And if they don't see, they're trying to push against this and they're just trying to create more problems. I keep an eye on it, but it's just a lot of FUD. It's a lot of, this country's banning Bitcoin. Now they're not banning Bitcoin. Then they're banning Bitcoin. And if you keep in that emotion, it's going to lead you in the wrong direction because they're just playing their media game.
Remind us what FUD is, Eiren.
FUD is just basically like media news to kind of steer, emotion in people, I guess, I guess it's a game they play of put this out and let's see what happens in the markets. It's coming from traditional markets where
yes,
apples get sold here or some winter's going over there. They try and create
fear of uncertainty
through news.
Fear of uncertainty is FUD. Fear of uncertainty.
Yeah.
So basically, people that don't know, they spread rumors, and it's like a lot of cryptocurrency, let's be honest, were driven up because of it was either fear or greed.
Yes.
Need to make money or fear you're missing out.
Fear, FOMO. Yeah. So we've got FUD,
FOMO.
You've mentioned KYC, Jonny, which I know is know your customer, and you mentioned
Kentucky Fried Chicken.
Nice one. And what's AML? You mentioned AML, Jonny.
Money laundering.
Oh, money laundering. Oh, marvelous. Oh, I shall use that regularly then. Mentioned that.
But the thing is, going on to what Eiren's saying, he's absolutely right. And what we're seeing now is the technology, and this is where it's really interesting because this is where it's going to impact on your listeners and your clients, because basically you can use the technology and it can slash costs. So every year for the last few years, around the world, they've issued somewhere around $6 trillion worth of debt, bonds, whether it's from governments, whether it's companies. According to HSBC, who in theory are very, very anti-crypto, I say in theory, but we'll come back to that possibly, but they claim it's 90% cheaper to issue debt, bonds, 90% using blockchain technology.
Huh.
So what you're going to see is, and we saw a European Investment Bank a couple of weeks ago issue bonds. We saw the World Bank issuing bonds. So we're going to start seeing more and more governments and huge companies issuing debt using blockchain technology. And once they've got a digital bond, which can trade 24 hours a day, 7 days a week. This is all institutional. They're not then going to say, oh, we're going to put a check in the post to pay the income. They're going to have a digital currency.
Yeah.
And that's why 86% of all the members of the Bank of International Settlements, it's like a trade body for international banks, 86% of the members are currently working on central bank digital currencies.
Yeah.
That's why Bahamas it's the first country in the world to issue their own central bank. We've now got China, not on a blockchain, but it's still a central bank digital currency. And I am very, very certain within 3 years, every single major country will have a central bank digital currency.
See,
we are now.
We've got some questions that have come up, which I will do, but I just want to go into central bank digital currency, CBDC, because I am not a fan. I am not a fan of the idea of CBDC. I just do not like the idea of central bank or essentially government. I mean, I know ours is allegedly separate, but it doesn't have to be. Just knowing everything that I'm earning, where I'm earning it, how I'm earning it, and then where I'm going to spend it, how I've spent it, when I'm going to spend it. And then possibly them saying, oh, by the way, that money you've got in your account, yeah, it's going to disappear in 2 weeks. So could you just use it? It's up to you. But, if you don't use it in 2 weeks, it's going to disappear. Isn't that, so that I am not happy about any of that.
But Jasmine, that's exactly what the Chinese are doing at the moment. So the Chinese have actually been giving their citizens, they call it the red letter or the lottery, and then picking cities like Norwich and London and Bristol and Edinburgh and say, here you go, there's 50,000 people in Norwich and we're going to give you $30 worth of our digital currency.
Yeah.
You only have 5 days or 6 days to use it or you lose it. And you can only spend it on these sites.
Yeah.
Now, up to now, you haven't been able to spend it with Alibaba and Tencent because they have their own digital mechanism and they don't want people to use their sites. They want to use other sites like JD.com. So you're seeing there the government, which is a very different style of government. And I think you have to be careful not to say we're right and they're wrong or vice versa. They have a different way of managing their economy. But what a central bank digital currency gives you is it gives a new tool for governments to manage their economy. And that's a good thing, because we still, as I was saying to you, 15 to 20% of the US economy is the shadow economy. Globally, there are 1.8 billion people in the shadow economy. And for those that are all being city prissy and say, oh, I don't know what you're talking about, how many of you pay, as I said to you, your cleaner, your car getting washed, your gardener, giving someone a tip, and you pay in cash? But we're all guilty of it. And that's why it's a $10 trillion economy. But with digital currencies, all of that goes, because you'd be stupid, because actually it'd be tracked and traced and you could be accused of actually not paying your taxes.
Well, this is true. And I do understand that. I know Gary's a fan of this. And I do see that there is there is a serious, as you say, shadow economy, gray economy. We need that tax. But the constant surveillance, the data tracking, all of that bothers me enormously. I think it would enable authoritarianism, which of course is no problem in China, because that's the way they run their country already. But in an allegedly free society, it doesn't sound like a good idea to me.
Just to add to this, I mean, we were having a discussion the other day about when we're designing this software. I mean, I've been designing software over 25 years, and there's an ethical side to this, just to make sure that what we're building can't be misused. And we want to try and design into software now a way of it. And I kind of looked at this, basically you can't use it to be weaponized against the individual. Their data should be private to them. Yes, governments need to track tax and earnings and things like that, but they shouldn't overstep the mark. And I think that there needs to be a proper pushback from society and people to say, no, you shouldn't be tracking in this way. There's a lot of systems now being just turned on over the last year or two. I'm getting updates from my local or like a beach parking lot telling me my MOT now needs to be renewed. The way that data is being shared now is just getting too overboard. We need to make sure that the government are kept in rein. They only get access to what they need to be getting access to, and you have your rights and your data is yours.
Yes.
And there is other coins out there that will start to come on to protect this. The whole point of blockchain was to be centralized, to move this stuff away from the banks. You have other privacy coins, Dogcoin, and things like that that are not trackable in that way.
Could you mention some of those privacy coins, because they are interesting to know about?
So there's Dogcoin. That's quite one of the big ones. I haven't got the list of the others here. Maybe Gary knows a few of them.
Yeah, Gary.
Yeah,
No,
ZCash.
Monero.
Yeah, Monero is one of them.
Yeah,
as well.
the privacy coins, just in case you know. So basically, they really are private. Now they obviously they've already been accused of being the coins of criminals because they're private, but also for citizens who do not want to have everything they do tracked, which of course happens if you use your credit card, if you use your phone, and would certainly happen if we had a central bank digital currency, I think. Now I'm just going to go to a couple of questions that have been put on chat. We've got getting more and more questions, so I don't want to finish without going to your questions. So Margaret asks, firstly, can you tell us the name of some cryptocurrency trading platforms that we can use in the UK? Gary, you're good on that, I know, because I always get to say, Gary, which are the best trading platforms do you consider in the UK?
So if you scroll down a little bit further in that chat, you'll see I've provided a list of them.
Oh, you have? Good man. Well done. Oh, well, I mean, the ones that I think of is Coinbase, Kraken, Binance, and it's Kraken and Binance, by the way, that TSB was saying, we're not dealing with them. Well, no. And what was it? Oh, Bitfinex, although Bitfinex I find a bit difficult to use, to be honest. So yes, you've mentioned a few others, crypto.com, yes, excellent. So have a look at what he said. And of course, now Ronald, quite rightly, I totally understand this. He's saying, why is it, I agree, why is it that whenever Elon Musk says anything about crypto, there's a visible market reaction? Yes, very, do you know, I think it's going to happen less and less. I think people are increasingly irritated by him. I don't know, what do you think, Eiren? You're nodding.
Yeah, he's kind of become the puppeteer. But he's got a lot of followers. He's very active on Twitter and social media, and he's got behind a lot of the, as we call them, meme coins, coins that maybe don't have so much of a usage and are just kind of got massive followers on Reddit and Twitter, and people kind of see him as pushing this forward, and the fact that he put it, he's like I say, a lot of FUD coming from him in putting it on his Tesla company, then taking it off, and then having an attack against the mining and the kind of global warming side of that thing, when he knows all too well that's not really an issue here, and it shouldn't be even talked about. There's lots of solutions, and countries come out and talk about powering their miners by volcanoes and other ways of doing it, and he's one to talk with electric cars. I've seen Tesla PowerPoints powered by a diesel generator. It's hilarious. But we will see less and less than that. You've got a lot of the crypto community fighting back at him, and that's just crazy media warfare with him. But I would say this: you've got to keep an eye on all of the news that's going on. Do not be drawn into all of these little sub wars that are going on between the banks and the medias, the countries. It's the same with the mainstream media. If you get pulled into all of this, you're going to get emotional and you're going to make silly decisions. Follow your own research, or the people that are financially advising you, or if you've got those people, and just do what you feel comfortable with. Make decisions before you do trades about what you want to get out of something. If you're putting money in to double it and it hits that mark, put the trade in, put the sell in, and if you get double it and then it triples or quadruples or whatever it is, you're happy, you got what you from it, and you need to be okay with that.
Which is the same as investing in shares, of course. It's a similar sort of thing. Don't let the emotion, which is easy to say. It's difficult when it actually happens. I've got also a question from Ayodele. It says, lately criminals have demanded ransoms to be paid in crypto. What can be done to prevent this? Gary, you and I have talked about this before, haven't we? This.
Yeah, and it's something that's going to increase. If you look at the sales of ransomware software, so this is the software that's sold on the dark web that people can buy to then go and do ransom attacks against companies and that. The growth of ransomware has been several 100% per year. So there's lots and lots of script kiddies, so pure play amateurs who are buying this software now, and then they can go and commit ransom attacks. So there's not a lot you can do about that. What you can do is the organizations can put in place security perimeters around the technology to better protect them. So it's not crypto's fault that there's ransomware attacks. And in fact, it's quite amusing that a lot of the ransomware, you pay the ransom in crypto. And there was a case recently with the Colonial Pipeline hack. So the east coast of the USA, where various parts of the critical national infrastructure was shut down by a ransomware attack, where they had to pay up in Bitcoin. And the FBI and other authorities were actually able to track that, and were able to work with the exchanges where it went through, and so effectively seized the ransom, which is the funny thing. It's interesting that I was having a bit of a conversation on the chat before with someone about DeFi and about how it's decentralized and governments can't restrict it and this kind of thing. Well, the thing about a lot of cryptocurrencies is they're actually far more trackable and traceable than anything else. So in some ways, you don't want to discourage crypto being used to pay ransom attacks, because you can trace where the money's going. So I used to say a couple of years ago, it was always funny that law enforcement agencies would always say, oh, crypto's bad, criminals are using it, don't use it, it's dreadful, blah, blah, blah. But privately, they'd say, we love it. It leaves this complete audit trail of where all the money's gone. But don't tell the criminals that.
But what about the private coins then, like ZCash, Monero, Dogcoin?
So even with them, unless you use them in particular ways, I did some work with a professor of one of the London universities to prove actually that a lot of the time they're still traceable if you use them in the wrong way. It's a little bit like using a mask these days for COVID. If you wear it just around your chin, it's not going to work. And it's the same with privacy coins. One of the challenges with privacy coins at the moment, so we mentioned ZCash and Monero, is that it's actually harder and harder to actually buy them right now, because a number of exchanges have delisted them because they don't want to fall foul of regulators saying, well, you're dealing with mechanisms that can be used for counter-terrorist funding, ties in with the whole anti-money laundering thing, sanctions checking, sanctions breaches, and that kind of thing. So the banks, if you think TSB, they were saying about not wanting to deal with some of the reputable crypto exchanges. The banks certainly won't deal with the crypto exchanges that are handling privacy coins. And I do a fair amount of work in the insurance sector, and arranging insurance now for crypto companies. One of the conditions is that they will not insure any company who deals with privacy coins. So privacy coins, there's definitely a place, there's an opportunity, but they're getting harder and harder to use at the moment.
I remember having a conversation with you, Gary, a while ago, where you were saying that it's quite funny that crypto is pointed at as the currency for criminals, when actually it's the dollar that is the currency that criminals really like.
There was a great report, I think Deloitte produced it a while ago, about best methods of anti-money laundering. And just like as Jonny says, we don't offer financial advice. I don't offer criminal advice either. But I think the 30th most popular means of laundering illegal assets was Bitcoin. And number one was, without a doubt, the US dollar. That's way ahead. So this is not criminal advice, but if you want to be totally secure and safe in people not knowing what you're up to, a suitcase full of used dollar bills is still the best form. Yes. Apparently.
Apparently, yes.
Jasmine, on that.
Yes. Jonny, sorry.
Less than 90% of all US dollar bills have traces of cocaine on them. Yes. So when I go and see my sister in San Francisco, and I go to the cash point, or the ATM as they call it, and draw out a couple of $100 to go for the night out, does that mean I'm a drug dealer because my money has traces of cocaine on it? Yet, we've just done some work with a client, and they had to use an independent company before the major firm of accountants would sign them up. And they said, oh, we've looked at your wallets, and they use this terminology, 5 hops away from their wallet. Okay. 0.5% of the money had been on the dark web. So it was like a friend of a friend of a friend of a friend of a friend. And you think, and this is the nonsense that we're now dealing with. But let's be honest, many listeners may not be aware, but if you actually want to go and buy something worth more than 2,000 euros in France, it's illegal to pay in cash.
Oh.
If you go to your bank and actually withdraw more than £3,000, they would typically ask you, what do you want this for? I just want my cash. What for? Why? So you're worried about surveillance. You've already got it.
Yeah.
And again, when was the last time most of the listeners actually went to a cash point machine and actually used cash? Most of us don't use cash. Most of the shops in the pandemic wouldn't accept cash even.
No, I know.
So,
it's quite hilarious. I did this the other day. I had to pay something and I went through the same experience, wanted some cash from my bank, and they started asking all kinds of questions. And I'm like, well, it's my money. What's it got to do with you? And they were like, no, we want to know. And I ended up drawing money out of the cash point over multiple days. It was hilarious.
Well, yeah, this. I mean, as you're talking, Jonny, I'm thinking, well, I'll take it out, 2.5 grand, then next day another 2.5 grand, and then another 2.5, something like that.
But Jasmine, this is also a big risk of central bank digital currencies, because let's say you've got £100,000 with NatWest, Lloyds, TS, whoever it may well be, and I said you can either leave your money there, or you can put your money with the Bank of England. Where would you rather put your money?
Honestly, I don't know, because I don't trust either of them. If I'm brutally honest.
But from a risk point of view, the Bank of England all day long would win.
Yeah.
So if you suddenly saw a central bank digital currency backed by the Bank of England, what the banks are worried about, what certainly talking to the Bank of England conversation we've had, they're worried that all the money's going to flood out of the banking system and just sit with the Bank of England. Then what do the banks do? Because you need to bear in mind, one of the reasons Eiren couldn't take out his 10 billion was they've actually lent that 10 billion 10, 20, 30, 40 times. So if everyone went to the bank and said, can I have my money back? Only 5% typically would be allowed to have your cash, because we have fractional banking, which means that they don't have your money. That's why, if you want to get more than £5,000 out of the bank, you have to give them notice. It's a bit like going, I want to get $5,000 or yen or Swiss franc to go on holiday when you're allowed to travel. They don't have the money in the account. They don't have the money at the bank. And people don't realize this.
No, exactly. And this is an argument, really, again, in a sense, for crypto, because a lot of people are saying, oh, crypto is very dodgy. I'd rather have proper fiat money. Well, proper fiat money, as you point out, and Gary and I've talked about this before, it's not there. It's not in the bank. It's not, we think that we've got 20 grand or something in the bank. As you say, we haven't. If you wanted it now, they probably wouldn't have it to give it to you.
So basically, banks are a Ponzi scheme.
Yes,
Yeah.
that's exactly right. Exactly.
Government endorsed, though.
Sorry?
Government endorsed Ponzi schemes.
Yeah.
So I mean, that was the whole point of the statement of Bitcoin in the start in 2008 was around that crash. It was the whole reason to bring it out to get rid of the scams that were going on. But just even to look at, I mean, I won't give this as financial advice, but what I'm even doing with a lot of my crypto that I'm getting in, I'm then, I'm a long-term hodler of it. I'm not also just day trading it and things like that. So I hold a certain amount that I build with cost, like cost averaging, like Jonny said. I'm moving these into other products, and these other products are backed by other Goldman Sachs banks, companies like Nexo, where the way that they set up, their kind of structures of lending out money is, they actually have a pot of money with your money, and they don't lend out your money. They lend out investors' money. So your money is always there. And I said to them, I go, so if every person came and took their money back today, could you give it back? And they said, yes, because we don't lend out any customers' money, and things like that. And these companies are seeing that the banks aren't giving you what's due. In the year of 2020, I was earning 8% interest on my GBP. And I made a tidy interest over that. And you can also put cryptocurrencies in there, and so they're not just sitting there earning money on the crypto value. You're also earning interest on top of that, and you typically see a lot of these interests be very high, anything from 4 up to 12% interest, and that's daily compounded interest with some of them as well. So once you get deeper into this, there's more secure places to put your money, and you know, like anything as well, there is the risks there of these companies folding down. You've got to do your research, see who they're backed with, see who they're insured by. You know, Nexo is with Goldman Sachs, and GoBit as a company that is also owned by I think it's Coinbase now. I think they bought that. I don't know if you can correct me, Gary, you probably know some of that. But you know, there's lots of, once you get into this and you start moving into it, which you'll start to see, you know, when you're speaking to financial advisors these days, they don't have the education, they don't have the knowledge of this. You know, a lot of the financial advisors that I speak to start asking me a lot of questions about how to invest their money, which is really strange.
I don't think they're allowed to advise on crypto.
No.
So that's part of it. I've got a few more questions here. So John says, and this might be a good one for you also, Eiren, it appears easy to purchase Bitcoin, but concerned that it may not be so easy to sell it. Also, I understand Bitcoin have only 3% invested in US dollars as an asset base. Actually, I'm not 100% sure about that. Who'd like to answer that? Jonny or Eiren or Gary? Who'd like that one?
Well, if I can just answer the thing on the liquidity, because I think this is one of the things which is catching the attention of equity markets, and that is the liquidity of some of these cryptocurrencies. And what I mean by liquidity is the amount you're seeing being bought and sold every day. So if you look in the last 24 hours, we've seen people buying and selling Bitcoin to the tune of 33 billion. Now, there's very few companies in the world that have that sort of liquidity. So what we're seeing is actually certainly the top 10 cryptocurrencies have the sort of liquidity that most traded companies would absolutely die for. And if you don't have liquidity, when you see a buyer or a seller, it pushes the price up or it pushes the price down. So liquidity is a really important thing. And that's also something I think you need to be careful of if you're buying into a cryptocurrency that is perhaps lesser known, and you put £50,000 in, that's fine. But the trouble is that if you want to come out, that could be 2 or 3 days worth of trading potentially. So keep an eye on that liquidity, because that could influence the actual price that you're paying when you do come to sell. But there's many crypto debit cards now whereby you can effectively put your Bitcoin, Ethereum, Ripple or XRP onto that, and then use your debit card with Union Pay or MasterCard or Visa in 40, 50 million outlets all over the world. So you can spend your money, you know, go and top up your car with petrol or get a train ticket or a bunch of flowers or a coffee using a debit card linked to a cryptocurrency. So you know, there's many people living their whole lives effectively outside of sterling and dollars and yen, and they're living it. Aaron's put his hand up. I thought he might be, and that's what they buy.
As much as I can, you know.
Have you?
Might I add to that? Sorry.
Have you got one of those debit cards?
I've got a few of them.
Nice.
I mean, my crypto folder on my phone with all the different platforms that I'm in, I've got loads. But just something to understand about the liquidity as well. You know, obviously getting into smaller altcoins, alternative cryptos, it can be a big problem. I don't see this as so much a big problem in the top sort of tier of things. And I would say to understand the different ways of purchasing and selling Bitcoin, you know, you've got on the market buying and selling, and then you've got kind of institutional kind of selling. Like if you go to Coinbase right now and you just open the normal Coinbase app and you buy some Bitcoin there, you're buying it from Coinbase. You're not buying it on the market. You know, you're buying it, you know, they have a stash of Bitcoin that they've got there that they're going to sell and, you know, and buy. It's not till you actually go to like Coinbase Pro or the other, you know, places like Kraken and things like that, where you're buying on the market. Now that's where you have the liquidity problems, or maybe not so much problems, because there's so, like Jonny's saying, it's the volume that's being sold is so high. So just to understand those different things, and also the fees that come along with that. You know, the fees are definitely higher when you're buying off market than to buying on the market, and that's the difference really. And just do some, sorry.
I'm thinking that is the downside with Coinbase. I mean, you know, when people ask which platforms should they use, I always say Coinbase to start off with, because it's the biggest. Well, it's certainly the longest established. It is the most established. It seems to me to be pretty safe, but it is more expensive than the others. So
you do have Coinbase Pro, which you can just jump straight into, but the learning curve there is a little steeper, and you need to understand a bit about markets and trading. And you know, if you don't understand these things and you put decimal points in the wrong place, or you don't do the conversion fee, you know, these things can bite you. So please do your research. You know, I've seen people put things, you know, numbers in the wrong place, and it could be a digit here, and it can get quite confusing. I know that Kraken platform is particularly, you know, hard to, you know, some people can't get over the UI of things. So choose somewhere you're comfortable in. You know, if you're in your first year of crypto and you're not very technical, you know, you are going to get a fee, but stick to those Coinbase, you know, places to buy it, you know, the easy, you know, where you'll just know what you're buying and what you're getting, and you're not having to do a lot of the sort of technical stuff yourself.
And this moves on also to now a question from Iodella, which is what a lot of people ask. She's saying, you know, Bitcoin's the main one, of course, but there are other cryptocurrencies. So which of the others should I invest in? Which is a, you know, good question, which lots of people ask, because there are all sorts that, you know, potentially you could. So I'm going to ask each one of you. So Eiren, give me 2 or 3 that you think are decent alternatives.
So I'm kind of heavily into Ethereum as well.
Course,
this is a you know, a coin that has a lot of usage. You know, there's a lot of good developers. You've got Ethereum 2 coming out. That's a good place to be. It's what a lot of the industry have built their infrastructure on top of. So it's not going to be going so much anywhere else. I've also got a lot of Cardano. That's doing something similar. And I don't know if this is one for many people, but I'm into Chainlink, which is an Oracle type coin that allows cross coins to actually communicate, that a lot of people are going to be building on top of. I mean, they're the ones that I'm sort of into at the moment.
Excellent. I'll try Gary next. Gary, which ones do you like? I'm not asking you to advise or anything like that or recommend, but which do you like, apart from Ethereum, of course?
So it really depends, because answering Odell's question, I actually answered it in the chat again, that it really depends on individuals. And so all that I like Ethereum has got no bearing whatsoever. I like Ethereum and I like Cardano because of but I like the technical aspects. Now, to me, they could go to 0 in price. I don't care. I like them. And it's the whole thing. This is where it really comes down to where people ask for recommendations of which are the ones to go for and this kind of thing. It depends on your personal circumstances. There are some, I used to particularly like, there's one Bitcoin Diamond, and I liked it because it was so phenomenally volatile that if you timed it right, you could do really nicely out of it. But that's purely because that was a curiosity. That is not a recommendation whatsoever. So it does depend upon individuals as to what their risk appetite is and why they're doing things. The other thing to bear in mind is, and again, I stuck this in the chat, there is currently no correlation between the technical capability of either the network or the software protocol. There's no connection between that and the price of the cryptocurrency. Because if there was, Ethereum, which is the prime platform for DeFi, for NFTs, for smart contracts, Ethereum would be 100 times the valuation of Bitcoin, because Bitcoin allows you to transfer value without an intermediary, and that's it. They're going to be launching a programmatic capability soon. So in terms of what it can do, Bitcoin's pretty rudimentary, and that is not reflected in the price if you think functionality's got anything to do with it. So you look at things like Cardano, great team, great proposition, that kind of thing. Charlie Hoskinson, who's behind it, I don't think he's bothered about what the price is of the coin, because that's irrelevant. And when you look at it, you know, a dollar isn't worth $1 because you can twist it and turn it and do origami with it, compared to a euro, which is made of plastic. So functionality's got nothing to do with it. So my thing is, it really depends on what your interest is. Go and read up on some of these things, and then you'll discover it doesn't make the slightest bit of difference.
Jonny, what do you think? Which do you like?
look, as I've said, if any of us knew which one to buy, well, I probably would be talking to Jasmine, because I've been messing around with sort of managing people's money for years. If anyone tells you which one to buy, probably don't buy it.
Right.
They've probably got a vested interest, or they don't really know what they're talking about. They're being hoodwinked in by someone else. Yeah. What I would suggest is you really, really, really must have between 1% and 5% of your money exposed to this asset class. And the safest way to do that is to have it in some sort of index type product that's exposed to a portfolio of different currencies. And as we said, these things are trading 24 hours a day, 7 days a week. So for a human to be able to do it, it's extremely difficult. If you want to have some fun, and looking at the FCA's recent survey, 30% of people that bought crypto did it to have a gamble. That's fine. The gambling market is 15 billion sterling in this country. Having a flutter because you've heard, you may think XRP, Ripple, that's going to do really, really well. Well, go for it. But if you're looking to actually have your money actually on a longer term basis, then maybe Ethereum is going to be great, maybe Cardano is going to be great, but right now we don't know. So having exposure to a portfolio that's actively managed, not someone's views, but based on some sort of capitalization or some sort of liquidity, it has to make more sense. And we ought to learn from our mistakes, and the mistakes we've seen in mutual funds, active managed funds, 2/3 of the time don't beat the index. So why is it going to be any different with cryptocurrencies? So get an index type exposure, and then just ride the wave.
Or, I mean, that sounds like a nice idea. Or of course you can do it yourself and just invest in, about 10 different cryptocurrencies that you like the look, that you think are going to have a long-term future. As you say, if you're going to be sort of trading, gambling in and out, then you can lose money that way. But spreading it across 10 or 15 currencies that look decent, look interesting, you think, oh yeah, that could have a future, then yes, that sounds like a sensible view. You mentioning though these actual products, an actual kind of tracker, like an index tracker. How do you get one of those? Where do you find them?
There's loads. Just Google it.
Right. So a cryptocurrency tracker.
Yeah, just put in cryptocurrency tracker. There's loads of them out there. Unfortunately, the FCA are trying to make it increasingly difficult for smaller investors. For larger investors, there's 431 different hedge funds out there giving you exposure to that. There's a number of ETFs which are now being launched. In our digital bites, which we write every week, we talk about these. I think last week's edition, it actually lists out a whole load of different types of ways you can get exposure to these different types of areas. But I think the key thing is that we actually don't know the questions to ask, let alone the answers. We don't know out of those 15, which 15 we ought to buy. So we just, there's over 10,000 now cryptocurrencies out there. So don't pretend that you've got some inside track. Make sure that there's a disciplined approach, and a machine is basically spotting the newcomers that are coming up from number 50 to number 10 to number 6 to number 5, and you can ride that, and that's a much safer way for just a little bit of your money. That's all I'm suggesting.
Yeah, sorry.
I was just going to add to that. I mean, just to kind of give you an example about how I used to choose, and still probably do, and coming from a development side of things, like any investment, do your research on the company. Do you like the company? Do you like the owners of the company? Who's involved in it? Like, I spend a lot of time looking at, their GitHub, which is their code repository. What developers have they got working on this? How many, how long are they committing to the project? And you could see the scams of these coins in the early days, where they'd have a GitHub and they'd talk about all this development, and nothing was going on. So you were like, right, have they got a secret GitHub somewhere? They're not committing. And they're doing these big kind of, conferences and things like this, but they've got nothing going on. They got no intellectual property. So really just do your research on the company once you're getting into it. And just to kind of move on to scams, and you're probably getting to that, but if you do invest in Bitcoin and you start getting emails and these things, don't, like any scams these days, do not respond to anything. Do not believe in the hype of someone selling you a dream. There is things out there, but no one is going to send you an email, give you a call and promise you a dream. Put the phone down, ignore the text, don't reply to the emails. forget all that stuff and only contact the companies that you have originally invested with, and make sure that they are the companies, and you go to the site yourself and you're checking the domains and the phone numbers. Because I know seasonal investors that, you know, a friend of mine got scammed the other day, and I was like, how did you even, you know, he just got emotional about the dream that they were offering, and he lost $5 grand. And it's crazy, like, out there. So just do not fall into any of those traps in the early days, or ever, really. You know?
Thank you. Yeah, really good. And also anything on social media, because there's loads on social media. Just ignore it. Well, we've come to the end of the session. Jonny, could you remind us again of Digital Bytes, because anybody can sign up for that newsletter, can't they? We could put it in fact, do put it in chat, the link for signing up to
just go onto LinkedIn and send me an email, and it's a weekly, it's free for individuals. We have a number of corporate brokers and accountants and lawyers that subscribe, because they use the content to create their own version, but it's a weekly analysis looking at the updates in the blockchain and digital asset sector, using all sorts of publications, websites. So it could be Le Monde, Wall Street Journal, Singapore Straits, the FT, BBC, CNBC, and it's really trying to help people understand how, where, and why the technology is being used, the actual digital assets are being created, and a bit of an overview on the macroeconomic situation, because that's really important, because with investments and with business, the macro situation will very much end up driving what's happening in the real economy. So we look at technology, we look at the assets, and we look at the macro situations. That's every week. Just go on my LinkedIn, or they can contact you and email me, and we'll send it to you every Wednesday.
Brilliant. Gary, give us, you've got quite a few, you've got a meetup and all sorts. Tell us about those and put them in chat if you can.
That's right. So I run what's called the Bucks Crypto Club, which was originally named, the Bucks was not to do with the US dollar, but the fact it was Buckinghamshire. But now, since COVID, it's open widely up. So we actually have a Zoom meeting every Sunday evening where we talk about latest developments, that kind of thing. That gets recorded. We stick it on YouTube as well. So if anyone wants to check out on my YouTube channel, all the past recordings of all the things are on there, because you'll find that we're probably going to disagree with some of the things that have been said today, but that's good. There's some debate. So yeah, the easiest bet I would suggest to people is just Google me. If you put in Gary Nuttall blockchain, you're going to find me. And I'm more than happy to share links to some of the WhatsApp groups I run, the meetup group on cryptocurrency, Telegram groups I run, and a few other useful resources as well.
Brilliant. Susan, who's just come, she said you've missed a lot. Yes, you have, Susan. But I'm recording this. I will upload it to Money Magpie. We'll put it in the newsletters. It'll be there for a long time. She's saying that she's been receiving Bitcoin emails saying that she's won. Yeah, you haven't. I can tell you now. Yes, did have a look and did inquire and form. I'm not. Let's see. I'm not sure what to do. Ignore it. Can you advise? What's the best start? Yeah, I would just say, just ignore any of these, like Eiren said, ignore any of these calls, any of these emails, social media. It's not real. It's absolutely not real. And they're there to take your money, definitely. So Susan, if you'd like to get in touch by email or by Twitter or Instagram or Facebook or whatever, we're all Money Magpie, or me, Jasmine Birtles. I'll reply to that. I've also put on chat a link to the investing newsletter. So every other Saturday we have an investing newsletter. And with that one, we have a lot of stuff about crypto as well as ordinary investing. So do have a look at that. Thank you. Thank you so much to Jonny. Thank you to Gary. Thank you to Eiren. It's been a really fascinating conversation. Hope to do this again in a few months' time. So come back if you can. Great to see you. And thank you everyone for joining. Goodbye.